and incremental news, that continues to be positive. I don't see anything negative out there which can result in a sudden correction in the market or anything like that. If you look at the macroeconomic fundamentals of India, continues to be pretty good, among the best as far as the world is concerned. Earnings growth this year, we are looking at 18%, that is FY24. Next year, for the Nifty 50 index, we're about 11-12%. So not too bad. And if you look at the global setup, interest rates will probably start declining from March. Actually, that's what the market expectation for US federal fund rate. So all said and done, the market setup is reasonably positive. The problem is valuations are, fairly rich and discounting a lot of this positives and possibly more. So yeah, so as I said, it's a tussle between value on the one side, which is simply not there in the market, and sentiment, which is very, very positive.
Right. Hi, Sanjeev. Good morning and good to see you in as always. Sanjeev, for the past year, it belonged to the broader markets. Mid and small caps did much better than the large cap names. Do you think 2024 is the year with at current valuations, you could see the large caps actually outperform and 2024 will actually belong to the large caps?
Well, we have been saying it for the last 3 months or so that, the mid-cap thing is probably overdone and it looks like, there's a lot of fraud in many of the mid-cap. One of the stocks you mentioned, I heard one of your people commenting on Eicher, and if you do any sort of reverse valuation, obviously there's no way you can justify the current market cap of the company. So there are many such stocks, in the mid-cap space which have run up well beyond the fundamentals. Incremental news is positive, but the problem in the market seems to be that with every incremental positive news, the people are, adding more market cap without realizing, a lot of good news already priced in. You can't give the same news, you can't discount it 5 times, right? So that's the problem as far as mid caps and small caps are concerned. There's a lot of fraud in many of the mid cap and small cap names, particularly in the investment sector. Anything to do with capital, investment that is capital good, defense, EMS, electricity, renewables, railways, a lot of fraud over there, to be honest with you. So my sense is, if you are more focused on fundamentals, from a reward risk balance, large caps look much better. Actually, last 1 month, at least you have seen, the large caps also starting to perform. And that is what our call was also about 1 hour, that, large caps should now probably start coming back. And thankfully, we have seen some rally in some of the large cap names. I mean, honestly, there's not much value across market cap or sectors now. We can still find some value in some of the large cap names, particularly in the banking space. But other than that, it's a general struggle to find any value in the market. If I look at fair value which our analysts have, versus the current market price, in most cases we have maybe, just about 4-5% upside or a lot of downside. And when we're talking about 1 year forward, fair values, so the struggle is there's absolutely no value in most part of the market now.
Hi, Sanjeev. Good morning. We hear you. I think that's going to be the pain point for pure fundamental stock picker, right? Because, you've got a market at 19 times and individual stocks much, much higher. So completely hear your valuation argument. Having said that, let's talk about, as you said, sentiment is still buoyant. So we have to run with what we have here. So let's talk about perhaps what could be the big trades of 2024 as you see things right now. And around us, as we hear the chatter and the narratives, I hear sort of 2 talk points. One is banks, as you said. Do you believe that large banks will be the big trade of 24? And the second question is on this continued rush in industrials and in PSU stocks. That was a trade of 2023. Do you see that continuing into this new year?
Ultimately, you have to look at, from a fundamental standpoint, when you see reward risk balance being favorable and in your favor with some margin of safety obviously built in. As I was saying, the only space where I can still see some value is some of the large caps and banks, which you look at their valuations, let's say on a 12-month forward price to book basis versus where they were trading before the pandemic. In most cases, valuations are actually lower when the fundamentals have become stronger. I mean, there are some concerns about, NIMs coming down and credit costs at the bottom down the stuff. But, those are very well-known facts, and most analysts have already built those assumptions into the models. And despite that, most of the banks are doing between 13 to 16% ROE. So presumably the books will compound at a similar number. So even if the multiples don't go up from where we are, assuming no rating in the multiples, then we can still make, mid-teens returns as far as the banking space is concerned, which is not too bad. In the context of the fact that most of the sectors, I can only see downside, to be honest with you, assuming fundamentals reassert themselves, honestly, nobody can forecast prices, so it's a futile exercise. But all I can say is if I look at the price value proposition at this point in time, there is absolutely no value in most of the parts of the market, and especially the sector you mentioned, industrials, PSUs. Obviously, that's a very, very wide space, but most of the industrial names have gone up a lot. No real value over there. The problem seems to be a lot of good news is already discounted, and every incremental news the market wants to increase the market cap, which is a bit strange, right? I mean, there's a big disconnect between incremental positive news, and I'm the first to admit that news flow is going to be positive, but a lot of that is already priced in. I mean, look at a Cochin shipyard as an example. How many new aircraft carriers is Cochin shipyard is going to deliver, which have not been already priced in. I think 2 or 3 have already been priced in, looks like, looking at the market cap of the company. Similarly, look at BHDL. So that is our problem over here. A lot of good news priced in. If you look at the rate of stock run up, between 100 to 150% in the last 6 months or so. So where is the scope of any positive surprise left over there? So that's the challenge, when it comes to mid-cap and small-cap space, the valuation is just extremely high. A lot of positive news is already discounted in, and I hope the news flow continues. Otherwise, we have a real problem on our hands.
Actually, that's interesting you say that. I was doing a show a couple of weeks ago with Sandeep Tandon of Quant MF, and he said that the only 2 sectors that are still not in very attractive zone from a retail investor standpoint are metals and pharma. So these are perhaps, names where you can still find some valuation headroom. Would you agree with that assessment?
Metals, I don't have a very firm view. It all depends on what's going to happen to global commodity prices. And looking at the construct of the world, doesn't look like we're going to be seeing fairly strong global GDP growth. And keep in mind the fact that China ultimately is 50% of all metal volumes. Give or take, and if China is slowing down, given the challenges on the housing space over there, I'm not too sure whether you can have a real robust commodity cycle. And same is true for other big geographies, economic geographies, I should say, which are US and Eurozone. Europe continues to struggle, and US is also slowing down. So all of a sudden, then I'm not too sure what's the big trigger for a big bull run in commodity prices, given a general slowdown in global demand condition and supply-demand dynamics. I don't think look that favorable as far as most measures are concerned. Pharma is a different proposition. You have to look at every pharma stock on a more bottom-up basis. I don't think there is thumb rule that you can use over there. As of now, also, I'm not seeing that much value in the pharma space also. Keep in mind the fact the stocks have gone up, over there. Most of them are trading at, probably 25 to 30 times. Some of the domestic pharma is even higher, actually, on a 1 year forward basis. So not much juice left over there, but if you are trying to find places to hide, assuming there is a market correction, I don't see any trigger for that. Hopefully not, but it doesn't look like there's a lot of value left in pharma also at this point in time.
Sanjeev, I'm reading a note coming in from Kotak today on GAIL. I've gone ahead and downgraded it. It appears that one has running ahead of itself on optimism. A couple of these names, it appears that you're fairly cautious on them at current prices.
Tell me, what is the thesis over there? People keep on coming with all sorts of theses on the PSU names. On GAIL, when 3 months back, everybody was concerned about, or rather very excited about, high crude prices leading to much higher profitability as far as the petrochemicals and LPG business is concerned. Now that crude prices have come down, the thesis have moved, to higher gas transmission volumes. I mean, why would suddenly gas transmission volumes go up in the country? I have no idea. But that is the whole problem. The thesis just keeps on moving from one thing to another thing, and people keep on finding, value in some of the PSU names. I mean, NTPC is one more classic example. At half the market cap, a lot of excitement around on the renewable portfolio. Nothing has happened out there. Now the thesis has moved, to the creation of, coal-based portfolio. So people just, build narratives now, and market cap goes up based on narratives. Try and do any reverse valuation of many of the names. You will struggle to justify even half the market cap of many of these companies on a fundamental bottom-up basis. No, seriously, I mean, I can challenge anybody in this market who wants to have a debate on me or some of these stocks, whether you can justify the current market cap on a first principle basis. It's going to be a lot of fun, I'm telling you. Try and do things on a bottom-up basis, you will realize what is going on in the market.
Absolutely, Sanjeev. The problem is we have to find, a pure bottom-up, analyst to come and counter you, because the market is moving on sentiment and flows, and we're talking now 66,000 crores of FPI money in December, and God knows, how much later this year. Sorry,
job of most people in the market seems to be just chasing stock prices. Huh? That seems to be the job of analyst and investor.
So, okay, as we wind down the discussion, let me ask you about another issue that I'm sure we'll keep bringing up with you as the year rolls on. One big market event is going to be a high-profile IPO in the form of Ola Electric, right? The first pure-play EV company coming in. And every time I look at it, Sorry?
Can't comment on such things.
Okay, or not specifically on Ola Electric. My question was more broad-based, that, it reminds me of the time when a lot of the new age companies came into the market. Initially, the euphoria was built up, then the stock prices crashed, then we went through a learning curve. And now, for instance, in the case of Zomato, companies have decided the path to profitability is important. Business models are evolving. Mangalam was just telling us that, look at platform fees now a reality. So how do you see this playing out? New age, if you have a view there, and in general, some of the newer businesses that will come and list on the street this year.
Always question. I don't know what to answer, to be honest with you over here. But it all depends on what valuations they come in and so on and so forth. It's very hard, to make a generic comment on something which will, happen in the future, right? Honestly, no views on the things which I really can't comment on.
Okay, all right, fair enough. We hope to have more conversations with you, and we'll keep the valuation debate alive. That's a promise. And wish you a very, very happy 2024 to you and your team, and of course, personally and professionally. All right, that's a view on the markets, which is taking things a little quiet this Tuesday morning. But let's move on and talk about a sector that's in focus, and really a company that's been, really the talk of town. The telecom space is what we're talking about. Stocks like Bharti Airtel and Vodafone Idea have witnessed a good surge in 2023. Vodafone Idea particularly has seen a stellar move in just the last 2-3 trading sessions. It's about a 30% gain that we're talking about in just 2 sessions alone. To discuss what lies ahead for the telecom sector, for telcos, the outlook ahead, we have with us a telecom industry veteran and, of course, subject matter expert Sanjay Kapoor, who was also the former Airtel CEO, as well as Balaji Subramaniam, Vice President of IIFL Securities. Gentlemen, thank you very much for joining in. Good morning, season's greetings, and let me start by wishing both of you a very, very happy new year. Sanjay, first question to you, and I'm just going to dive straight into it and get the elephant out of the room. We spent the better part of 2023 wondering what's happening to Vodafone Idea, whether we are now a two-pronged market, can there be a third player or not? And every now and then, buzz keeps coming in. Without, bordering on the realm of speculation, let's get your view in on this. Is there a real chance of survival and Vodafone Idea finding more equity, perhaps more investors? In 2024, are we looking at a complete duopoly market, or will we have, a thriving third player?
All right. First of all, a very happy new year to you and all the viewers. I'll try to answer your question to the best of my ability. Let me start with a global perspective. First of all, the third and the fourth players globally are finding it tough to make a business case given the shortening capital cycles world over, because the technology that used to last 10 years now lasts only 4 or 5 years. So that's a global problem. And India is not delineated from that. Let's come down to the Indian players. There's a set of things that Bharti Airtel and Jio have to face in the coming years. And there's a set of things that the third and the fourth operator in India have to face during 24 and 25 and years ahead if they survive. Now, the moot question here is what happens to Voda Idea given the huge amount of debt that they carry? From a share business perspective, I actually don't see a business case where somebody from any part of the world will come and say, well, I'm willing to fund this company and bear all the debt burden that this company has and catch up with the market players and compete with them and make a business virtue out of this going forward. I actually don't see that happening, right? It's going to be really a very, very, very tough order. There are speculations, there will be speculations, but if Vodafone can get over that hurdle in 24 and find really somebody who can digest that much of debt and make a business case out of it, then my best wishes to them. But Being somebody who's been in the business for a very long time, I see a very, very remote chance of that happening.
Okay, I'm glad you put that down, right? For all the people who are feeling this FOMO factor of Vodafone. I mean, it's been a 30% rise in 2 days. So it's got to get everyone's eyeballs. But I'm glad you put down the facts. Balaji Subramanian, who also tracks this entire space, joins in now. Balaji, first explain to us what is the rationale behind this big move that we've seen in the last 2 days, and what's your own prognosis?
Happy New Year all, and thanks for having me on the show. As you would have seen, there are media articles which talk about Starlink potentially making an investment in Vodafone Idea, which is seen as some sort of a magic bullet which can result in the company's problems going away. But on this, I would also concur with Sanjay, who just mentioned how difficult it would be for anyone to assume Vodafone Idea's liabilities. So my sense is that one can't rule out the possibility of the promoters putting in equity at some point in time, now that the company has got government support. But the big thing is, who is willing to cut a large check, a check large enough, because we all know that there is this moratorium on spectrum payments and AGR payments till late 2025. But once we reach that point, the government also has got an option to convert the principal during the moratorium into equity, which means that whoever enters the stock right now sees a significant dilution potentially. So that is what makes things a little tricky. But one thing which one has to keep in mind is that about a couple of months back, or rather 3 months back, there was this development on Supreme Court allowing both Voda Idea and Bharti to file curative petitions against the AGR plea. So in case there is some relief on the PV of the AGR liability, then things can potentially ease a fair bit for Vodafone Idea. But at this point, it still looks like a long shot.
Okay, all right. Clearly stating that out. Good morning, gentlemen, both Sanjay as well as Balaji. Welcome to the show. Well, Balaji, I wanted to ask you about the other point. We were talking about tariff hikes in 2023. No material real hike came about. But in 2024, there is hopes again. What are you penciling in?
My sense is that till the elections get over, the probability of a tariff hike remains low. But subsequent to that, I think there are a number of things to watch out for. One is that Vodafone Idea may still have not raised funds, but at least they are growing their absolute revenue, which was not the case maybe 6 to 7 quarters back. Number two, the extent of revenue market share gains for both Reliance Jio and Bharti Airtel has come off in the recent quarters, because, as I said, Vodafone also has been proving to be more resilient of late. And thirdly, I think at some point in time, Jio Jio platforms will have to come out with its IPO, and before that, probably they would like to show better cash flows and return ratios, considering they are on the cusp of spending nearly $25 billion on 5G in the last 1.5 years. So all that means that a tariff hike is inevitable, and maybe sometime in the second half of this calendar is when we will see that happen.
Okay, let me actually bring in Sanjay. Sanjay, weigh in on this. It's been a slow grind, right? We kept waiting for Bharti to cross the 200 mark on ARPU. Finally, it happened. I think it was the first quarter, second quarter, they built on it. But the question is, will we get more meaningful tariff hikes at all? And if not tariffs, then what is the other big defining trend, perhaps, that one should watch out for this year from an investor point of view?
Yeah, absolutely. I think you are now moving the question from the laggards to the leaders. And leaders are the ones who can make a difference in the market on the tariff position. And Airtel has been leading this in the past. But let me come to the moot question to say, what do you expect out of Jio, and what do you expect out of Airtel in the coming year? To me, the biggest dilemma that all of them face is, do we double down on 5G, or do we just try and cover up the investments that we made? Because 5G is not returning capital to anybody, and it's become tough to monetize 5G. There are newer technologies coming in. We are talking AI, we are talking IoT, we are talking storage. Many of the nuances of adjacencies are now building up with the telecom operator. How do they monetize all these? And if they can't monetize, then what's the option? The option is to only grow the top line and make sure there's a healthier ARPU. And like you said, there's a healthier EBITDA resultantly. Now, if 5G is not going to return, and if the newer additions of customers, given the market is reaching more saturation and there's only displacement of market share from probably Voda, Idea, BSNL to these guys, which is also slimming down now, then what is the alternative? Alternative is only to raise prices. And given what is happening to the world, 200 rupees is absolutely insufficient. I don't want to crystal ball gaze on what is the timing of, but it is, to me, yesterday. They should be raising tariffs from yesterday. If they really have to make a virtue out of future technologies, be able to invest in customer experience, and double down on 5G and probably 6G tomorrow, then this tariff is not going to lead them anywhere. I think they need to take it up. And who can take the lead? It'll be either Jio or it'll be Airtel. But given the past track records, I think it is Airtel more likely and Jio to follow rather than the other way around. But I really hope and pray that in 24, they are able to raise up their tariffs. I leave the timing to them.
All right, gentlemen, we'll leave it at that. Thanks a lot for joining in and, just assessing the situation in the telecom sector right now. There's lots that happened. And of course, in the last 2 days, Vodafone Idea has been topping the charts. Let's slip into a quick break. Another stock that has topped the charts all of 2023 is Olectra Greentech. It was the big winner last year. We speak with the management, KV Pradeep, the chairman and managing director of the company, to discuss the outlook for 2024. Later, we will also have Sachidanand Uttekar of Trade Bulls to discuss markets from a technical lens in our special segment, Charting Trends. Stay tuned. Well, it's the start of a brand new year, but we're discussing the winners of last year, and there have been plenty, so let's talk about them. One of the big winners of 2023 is Olectra Greentech. In fact, not just 2023, it's been a big wealth creator in the last 5 years, so let's talk about that. In the last 12 months, it's seen a 164% return, last 1 year that is. But look at the last 5 years, 466% returns is what this company has seen. It currently is growing very well in the electric bus segment. It has a 35% market share and is striving to become the market leader. KV Pradeep, the chairman and managing director at Olectra Greentech, joins us now to talk more about the business. Mr. Pradeep, always great speaking to you. Happy New Year to you and your entire team. The journey has been really good so far, so I want to talk a little bit about that. Where are we at in terms of the overall order book currently, and what is the medium-term growth plan that Olectra Greentech has? If you can share some numbers with us.
Yeah, Happy New Year to you and to the viewers. Thank you very much for giving the time. Yes, as far as the numbers that are with the Olectra is, about 9,000 plus numbers today we have. We have participated in few more tenders where 3,500 buses we are L1, which we are expecting in a month's time. So that is briefly about the numbers. that Electra is aiming at.
Okay. All right. Mr. Pradeep, so we've got the order book then out there, and always good speaking to you, sir, on the show. Give us the execution trajectory. I recall the last time when you joined us, we were flirting with a number of around 1,000, 1,200 for this year. And for FY25, I think we were talking about doubling down to around 2,500 to 3,000. Give us an updated number. We have your order book. What is execution going to look like? For FY24, year to date, how much is it? What do you end this year with? And for FY25?
Yeah. Nigel, the first half of the year, we have delivered 232 numbers. And the second half of the year, the number would definitely be double what we have delivered in the first half. So about the next FY25, as mentioned earlier, we are planning for 2,500 numbers to deliver.
And 24, I missed that number. What do you end this year with?
500 numbers we are going to deliver during the year 25, FY25.
No, 24, sir.
24, H1, first half, we have delivered 232 numbers. And second half, it would be double that number.
Okay. All right. So you're planning for 2,500 bus delivery in FY25, and by the end of FY24, somewhere around 730 or so. But earlier when we had spoken to you, right, at the end of Q2, you had given a guidance of delivering 1,000 buses by the end of FY24. You had brought down that guidance from 1,200 earlier, and you also said that this is because of the stringent battery testing norms that your Q1 and Q2 was hit. And so now you're bringing down the guidance further. So is it fair to assume that there is some pressure that you're seeing in the system, and how long do you think it would take before things improve?
No. Last time what I have mentioned to you is that the stringent battery norms, what have been stipulated by Government of India, we have conducted all the tests, and we have taken the certification from Government of India. During that time, we lost almost 2 quarters. First 2 quarters we lost because of these stringent norms and the upgraded norms that are required to be obtained from the Government of India certifying agencies. Due to that, we lost 2 quarters, and we picked up, and the deliveries are the deliveries shall be about, as you rightly mentioned, it is about between 700 to 800 this year.
Okay, so we'll now deliver 800 buses this year. I think, that's why there's a bit of pressure on the stock as well, because you have been sort of scaling down your bus delivery targets throughout the year. So there is a little bit of concern over there. Can you tell us, I just want to understand that there are a couple of tenders currently underway as well. The Prime Minister e-Seva order of 10,000 buses, that tender was going to be floated as well. What is the timeline that you're looking at over there? You earlier had mentioned that you are L1 in those tenders. So when do you think you can expect those orders to come through?
Yeah. What I have mentioned is not about the Prime Minister's e-Seva tender. The Prime Minister e-Seva tender is yet to be, the quote is yet to be submitted, which we have not done it. As far as the other tenders, what I have mentioned, it is 3,000 numbers for BEST, where we are L1. And another 2 tenders, about 500 numbers, where we are L1 there also. Put together about 3,500 numbers tenders, we are L1, and we are expecting those orders in a month's time.
Okay, give us some basic details, Mr. Pradeep. What is your current capacity in buses and tippers?
See, as I mentioned earlier, we are switching over to our new facility where the capacity would be 5,000 numbers. The initial capacity would be 5,000 numbers, and the ultimate capacity is 10,000 numbers. As far as the new facility is concerned, as we mentioned earlier, the new facility is getting ready, and we shall be starting the partial production in the month of February. And the full facility shall get ready by July 24.
Okay, so this you're talking about currently you're at 5,000, you're headed to around 10,000 capacity, right? By the middle of 2024.
Yes, definitely.
And this is the combined capacity of buses as well as tippers. Do you want to break that up for us?
No. Buses and tippers put together, it would
Together.
be 5,000 initially and 10,000 ultimately.
Okay. The last time you spoke to us, you also spoke about some fundraising plans, and they were likely to get firmed up with the promoter putting in some money and maybe you getting a couple of other investors as well. Where are you at? What is the quantum you're looking at? By when will we, look at that? And who's going to put in the money?
Yeah. See, as far as the money raise is concerned, we initially thought of raising the fund for our construction of our facility. But subsequent to that, as the numbers are growing up and as we require some more big monies, so what we did is initially for the construction of the plant, we are raising the debt and we are raising the debt from commercial bank and we are completing a facility. Post that, we want to go in a big way for the fundraise.
Okay. So what will the quantum be, sir? I didn't get that again. What will the quantum of this fundraise?
Yeah. Still the issue is in discussion with our board. Unless the board approves, probably I may not be able to
and
communicate.
It'll be a third party or will it be the promoters that will be putting bulk of the money?
Both third party as well as the promoters. Promoters wants to retain their 50% stake and the balance will be from the third party.
Okay, fair enough. So promoters want to retain their 50% stake. That's important.
Exactly.
I want to understand also what the second half of the year will look like in terms of earnings. So the first half you've ended revenues, a growth of around 14%, a little over 520 crores. What kind of growth can you eke out in the second half and what's the full year target, both FY24 and 25?
As far as FY24, as I mentioned, 232 we have delivered, and the number in the second half, it would be double what the numbers we have delivered in the first half.
I'm talking about the revenues, sir. Yeah, on the revenue front.
See, probably the revenues, the exact numbers, probably I may not be able to speak. The numbers for the FY25, as I mentioned, it would definitely be 2,500.
Okay, 2,500. Yes, we got that. I want you to give us an update also on the insulator segment. I understand that there is a growth opportunity there. You have been, exporting to the US as well. What is the size of that business right now? How much do you think you can take it to over the next 3 to 4 years?
See, as far as the insulator business is concerned, I would like to mention here that we are the largest polymer insulator manufacturers in the country. 60% of the market share Electra Greentech does, and we are doing about 200 crores top line. Out of that, 50% we are exporting to US.
Okay. All right. One more point, that the street was waiting by for clarity is the government is looking at converting, I think, a few lakh diesel buses into electric buses. What kind of a role do you have to play, sir, out there? What is the opportunity for you?
See, as far as the market is concerned, probably you might be knowing that Electra Greentech is the largest electric bus manufacturing company in India. And our buses have clocked 20 crore kilometers on Indian roads. And we have a operational strength of 8 years of our buses. Since our buses have got 20 crore kilometers and every month we are adding 1 crore kilometers, electric kilometers. That's the strength of what Electra Green has. Apart from that,
Absolutely.
as we have very strong production capacity in technology, we are aiming big to grab the market, which is coming up in the coming years.
Okay.
Yeah, but there's that plan to convert diesel buses to electric buses, right? I mean, if you want to put a number in there, what kind of an opportunity it is there? Have you heard something from the government? Will there be subsidy? What kind of benefit can you get?
See, as far as the subsidy is concerned, there are two things. If the subsidy is given, the per kilometer price would be X. If the subsidy is not given, it would definitely be X plus. Both the tenders are there in the market, and for some of the tenders there is no subsidy, and for some of the tenders there is subsidy. Both things, the stakeholders are participating and they are taking the orders.
Okay, all right, understood, Mr. Pradeep. Thank you for giving us a lot of those details. Once again, wish you a very happy 2024, and perhaps it will be another good one for your team. Well, we have had a lot of auto talk on the show today. By the way, those Ashok-related numbers are not looking good. It's in sync with pretty much the whole sector. December's been a really tepid month. But for Leyland, the decline is as much as 10 to 12%, depending on which of the segments you're looking at. Stocks cooling off as well. Back to the market. The market, by the way, is showing up two trades right now. One is pharma, and there's very clear buying that's visible in a lot of the frontline names, so should take note of that. Look at Cipla, look at Divi's, look at DRL. So all of your large cap pharma names are seeing buying, best performing sector of the day. And autos is continuing to drag. The profit taking that started yesterday is continuing this morning. So it's not just Ashok Leyland. Should mention here M&M, Eicher, Hero, all your names are on the downside. Bajaj Auto, all of these stocks are seeing a further cooling off continue. All right, it is time for our special segment, Charting Trends, to talk about some of the bigger technical trends that you can look out for as you look at your trading bets. Sachidanand Utekar of Trade Bulls is with us to decode the market from a technical perspective. Sachidanand, thank you very much for joining in. First of all, wish you a very, very happy new year, happy 2024. I guess we are starting the year at a very interesting juncture because we're coming off after a very heady rally, especially the last 2 months. And now it seems the market is sort of, taking a little bit of a breather. But you tell us, are you expecting more consolidation or could there be more volatility? And, how should one be positioned given the rally that we've seen in the last few weeks?
Well, firstly, a very happy new year to you and all the viewers of CNBC-TV18. Clearly, I think the trend and the momentum from a market perspective has been very robust, especially if you look at the last 8 weeks of Nifty's trending move. We have already seen a very strong, consistent high top, high bottom base here. On the weekly basis, it has managed to trend above its 5-week exponential moving average support. Currently, this particular support is placed at around 21,560. So until unless we don't see the Nifty, breaking this particular support, the chances of a change in trend looks bleak. As of now, I think if you look at the exhibit here, since the way Nifty started trending above that 19,200 kind of a mark, somewhere close to the October series. Since then, the Nifty has been maintaining a very gradual move. The acceleration has been very robust in the month of December itself. But if you look at the continuity, we expect that this particular trend may continue towards 22,000, 22,240 when we look at the major trends. From a daily perspective, yes, we are seeing some bit of a consolidation here for the last few trading sessions. We are seeing some profit booking pressure. And if you look at the daily RSI, the exhibit 2 that I have shared, clearly, we are seeing that the RSI has been on a declining trajectory wherein the prices have been rising higher. So this is a classic case of a negative divergence. But we are not expecting any major change here. Probably a pause is something that was likely, and this is what has been exhibited by the index even right now. So I think from a trading perspective, until unless Nifty holds itself above that 21,500 mark, any declines on the lower side should be utilized to create some long positions. The major trend stop loss still stays at around 21,120 on a closing basis. And from a trading perspective, in case if we see a decline towards 21,500, 21,600, I think that will be again a good, healthy opportunity to create some aggressive long positions here when it comes to market.
Sachidanand, just repeating those levels for the benefit of our viewers because we're exactly trending to those levels now. It's a very decisive leg down. By the way, 100-point decline on the Nifty today. The market obviously broke yesterday's low in a jiffy, and now we're at 21,630. You're saying till 21,500 holds, get in and buy, right?
That's right. And keeping a stop loss somewhere close to around 21,120 on a closing basis. I think, the trade setup still remains positive. The higher top, higher bottom sequence only gets distorted in case of Nifty starts trending below that 21,120 mark. So the support at 21,560 remains healthy. So any declines towards that particular support would be a good opportunity to create some long positions.
All right. You do like some of the pharma stocks. There's Dr. Reddy's also on your list. Just take us through that. What's the outlook there?
Well, Sonia, I think we've been covering Nifty Pharma on this particular segment. We covered or we highlighted Nifty Pharma breakout from a rounding formation in the month of November. And since then, we've already seen the pharma index, scaling above by almost around 12 odd%. So if you look at the current structure on the monthly basis, this looks like a classic bullish flag pattern breakout. Now, a bullish flag is a continuation pattern which is exhibiting a price target somewhere close to around 17,940 and 17,500. These are the approximate levels that we are, expecting. And this has come after 4 months of consolidation. So I think the rally and the trend should continue going forward in Nifty Pharma. This is one space where we have been recommending some aggressive long positions. And if you look at the setup of Dr. Reddy's, on the daily scale, recently we have seen a kind of a double bottom formation at around 5,400 levels from where we saw a liftoff. Its daily ADX has now started trending about 25, which is again a good sign of strong directional momentum play, and that's why we're expecting that this particular swing could continue towards 59.86 on an immediate basis, and this is the juncture wherein we have seen some resistance. I think this particular resistance may be surpassed during this particular move, and we are anticipating that this momentum could continue right up to around 63.70, and that's why we are recommending aggressive long positions even at this juncture in Dr. Reddy's.
Got it. Okay, all right, Sachi. Always good to hear your thoughts. Thanks so much for joining in. We'll track that one. Dr. Reddy's, the last one that you spoke about. By the way, just keep an eye on the Nifty. We have moved lower. We're 100 points lower. Earlier today, I pointed out this level of around 21,630. The low of the day is around out there. The Nifty Bank, that's the one that's down close to around 300 points. I think we should get the intraday chart out there. That index itself has seen a sharp downtick. But a couple of stocks are doing well, namely Lemon Tree. Motilal Oswal has written a note on that one. Mangalam joins us to fill us in with details on that one. Mangalam.
Well, on Lemon Tree Hotels, Motilal Oswal believes that, this could very well be their top pick for 2024 as the company is scaling new heights. We've been talking about, the entire travel and tourism theme, etc. For Lemon Tree, Motilal Oswal has a buy call with a target price of 150 odd rupees. Why is it likely to benefit? One is there are changing dynamics in their key markets where there is rising demand and there is slower supply. That means that the company can go ahead and charge higher prices, see higher occupancies. And in a business like hotels where, costs are fixed, higher occupancies and higher prices would directly reflect in their operational performance as well. What is the other thing that will aid their operational performance? They are expanding via the management fees route. And by 2026 itself, or rather FY26, the management fees alone could be close to around 94 odd crore rupees. And most of the management fee, remember, goes all the way down to the bottom line itself. So all these factors favor Lemon Tree Hotels, and as a result of which, Motilal Oswal believes that this is the right stock to play the travel and tourism theme for 2024.
Okay, all right, that's the right stock out there. But the one that's the biggest loser on the Nifty today is UltraTech Cement, and after a while, they've disappointed in their operational update. Now, in the grey sales volumes, which is bulk of their volume mix, well, the growth out there was only around 5%, came in at around 25.44 million tons odd. The overseas business, well, out there on a low base, it did better because that growth was close to around 20%. Consolidated, that's the domestic operations, the white sale, grey sales, as well as the overseas operations put it together, the growth was only around 6%. Most of the street was expecting a number closer to the high single digits. So that was a little bit disappointing. And a couple of them had mentioned around 28 million tons odd. What could be the possible reasons that the sales volumes are lower than expected? A few factors could have played out. One is labor availability issues are always a problem during Diwali. So festive season, that's number one. Number two is we have pollution-related issues in North India. Delhi, NCR, there could be some kind of a lid in terms of, production-related issues. Next up, you have elections in select states. So maybe ordering was a little muted for around 45 days odd for the past quarter. And unseasonal rains in South India, that could have hurt as well. You could also throw in there severe winters in parts of North India, which could have hurt. So put all of this together, the operational update that has come through is a little bit disappointing, explains why the stock is down close to around 2.5%. Well, we just spoke to Sanjeev Prasad and he told us Kotak's view on GAIL. Sonal joins us to detail that brokerage report. Sonal.
Well, they have turned cautious on GAIL. They say the run that we have seen in GAIL stock price recently is more to do with optimism than fundamentals. And that's why they have downgraded the stock to a sell from a reduce. They say, yes, the recent run has been strong. A few months ago when oil prices were higher, so it was seen up as a proxy to higher oil prices, and that's why the stock was surging. However, when the oil prices came down, the stock did not fall. So basically, right now, the rise in prices that we are seeing is just purely on hopes, according to Kotak Institutional Equities. They say the stock has even been stronger than what it was, absolutely opposite to fundamentals. They say, as we noted last month, we believe that despite the recent strong gas consumption data, India's medium-term gas demand outlook is weak and long-term outlook is even weaker. So they are not very bullish on that. The outlook remains very weak for its petchem and LPG business as well, and higher transmission pipelines does not mean higher volumes for the company. In fact, return on capital employed will come down, and that's the reason they have downgraded the stock to a sell from a reduce with a target price of 125 rupees a share.
All right, thanks a lot for that. So that is on GAIL, down almost 2.5%. Let's do one thing. Let's take a quick break. On the other side, Manisha will join in with some commodity action coming up in just a bit.
Welcome back. So on the equity side, we are seeing a little bit of a bounce back. So this whole buy on dip thesis, it seems to be playing out because the market's held on to the lows and it's trying to find some stability around this 21,000 660, 670 zone. You can see the little reversal. So the buyers have come in. That's equities. Let's figure out what's happening in the world of commodities. We have Manisha with us in the studio now. Manisha, what's top of mind for you right now?
Well, it is the crude oil prices because we have started 2024 on a definitive positive start there. A percentage of gain is already what we have put on charts in the markets there. Remember, last year was a 10% decline, and that came in after 2 years of constant gain. So after 2020 is what we saw a decline come in for 2023. The other thing worth noticing on this chart is that the last couple of years have seen narrower ranges come in for the crude oil prices. 20 to 55% of movement in the previous years is what we haven't seen in crude prices now. But for this year, this promises to be a volatile year to begin with because we are looking at various uncertainties in the year going forward. There already is concerns of what we are seeing in Red Sea, and that exactly is what is adding premium to the prices. So as I said, a definite positive start coming in for the crude oil prices as we see in the start of 2024. There are US forces which are now striking back at the Houthi groups in Red Sea. There also are reports of Tehran sending warship in the Red Sea. So this is a thing that doesn't seem to be getting de-escalated anytime soon. If you look at the overall numbers here, we do understand that almost 7 million barrels per day of oil and products falls or flows through Bab al-Mandab Strait, and there are concerns coming in from that one. We also know that 12% of the global trade happens via Red Sea, and that also seems to be getting impacted right now. What is adding in premium in prices also is the fact that the minute you do not take these routes, but you go via the Cape of Good Hope, that is what most of the ships are doing right now, it adds $1 per barrel for crude and almost $4 a barrel for the crude products there. And that's exactly what is coming into calculation here. For the Indian markets as well, there are some concerns right now, but overall the fact is that there's not so much of Russian imports coming in right now. It's the lowest since Jan 2023 in sense of numbers that we have seen for November and December. Just to give you a sense of number, we saw an all-time high import coming in from Russia at 2.15 million barrels per day. But for the month of November and December, it has been just about 1.5. So it has seen a very sharp decline coming in. If you look at the overall numbers coming in sense of imports from Russia, that still is on the higher side in this year as compared to previous years. That stands at a tall 1.02 million barrels per day. 740,000 is what we saw in the previous year, and a much lower at 179,000 barrels per day in the year before that as well. What the markets though are watching for right now is the US non-farm payroll data. Well, that comes in on Friday, and that would give you further direction in sense of macros.
All right, thanks a lot, Manisha, for that. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Anuj Puri of Anurag Property Consultants, Gulam Zia of Knight Frank India, and Dipan Mehta of Elixir Equities to discuss the real estate outlook for 2024.
Welcome to It's the Economy. Home sales for the top 7 cities hit a peak growth of 31% in 2023 over year-ago levels. That's as per ANAROC. Bengaluru saw the highest rise in sales and highest fall in inventories as well. Price rise also is higher in that city. Several real estate stocks like Brigade, Prestige, clearly from Bengaluru, and even Macrotech have doubled over the past 1 year. The only sore point has been that affordable housing did very badly, and sales in this segment fell versus the pre-COVID year of 2018 by a huge 26%. Now, what does 2024 hold for us? We have a panel of experts, Anuj Puri of ANAROC, Gulam Zia, Senior Executive Director at Knight Frank, and Deepan Mehta, Director at Elixir Equities. Gentlemen, good morning. Thank you very much for joining us, and a very happy new year to all of you. Let me start with you. Anuj, your assessment. It's your report. I'm quoting 31% higher for the top 7 cities. What's the overall India tally and your initial outlook for this in 2024?
First of all, a very good morning and a happy new year, Lata, to you and your viewers. I'm delighted that on 2nd January at 10 a.m., you've got a real estate slot for all of us. It does mean is that this sector is becoming more and more meaningful, because if you can come on Lata's show on the 2nd of January at 10 a.m., it is pretty meaningful. 2023 has been a great year. It was like the sun, moon, stars, and earth were fully aligned. You had 31% growth in the demand, which is the sales. You had 25% growth in the supply across India. NCR was a little bit of a lag on the supply, but the overall inventory fell down, unsold inventory by 5%. And the best thing was that the prices were largely range bound between 8 to 12%. Clearly looks very, very promising 2023. As we go into 2024, if Lata, the economy continues to chug along the way it is, and the inflation and interest rates remain slow, I do feel is that 2024 may even outpace what we have performed in 2023, because we're not seeing any letdown in the demand, as we are stepping into 2024.
Okay. Oh, that's very good to hear. Thank you for the very kind words, Anuj. Real estate is, in a sense, the motor of the economy in terms of the jobs it generates and in terms of the reflection of prosperity and confidence in the country, and hence the choice of real estate for an economy show. Gulam, your first thoughts on the office space segment as well. How did it do in 23? And from what I read from both your reports is that GCCs have contributed to a significant amount of demand. But sum up 23 and first thoughts on 24.
Well, to me, what's most promising about 2023 was that this year we were inching closer to what we have done the historical best before the COVID hit us. And that's very encouraging, because during last 2-3 years, because of work from home and all kind of jargons thrown at us, office space was under a pressure. Now, that has changed. And as I said, 23 closure would be very close to what we did the historic best. And as you said, GCCs, yes, not just GCCs, but even inbound. Earlier, we used to talk about outsourcing. Now it is insourcing. Most of the banks, financial institutions, etc., are looking at the global capability centers, captive centers in India, which is taking it notches higher than what we were earlier, say 20 years or 10 years back, when we're talking about back offices. But in last couple of years, a decade or two, the capabilities, Indian competencies have increased. And now we are talking about absolute research-related top-end jobs in India, which means even the quality of offices required, spaces required, space per person required is all shooting up. So, as I said, the closure of 2023 was very encouraging, almost touching the peaks that we have seen historically. And 24 promises even better. So, taking it up from what Anuj said, not just residential, but even office market is going to perhaps break the records in the coming year.
Okay, you're saying both residential and office is likely to do better in 24 than 23. Is that right, Gulam? Yeah.
Indeed.
Anuj, Anuj, you'd agree?
So, I do want to add is that I think Ghulam explained it beautifully. I just want to add this phrase is that it was absolutely a pleasant surprise, Lata. I did not expect, honestly, the offices to do so well, as Ghulam has enumerated. I mean, if you look at West, Lata, if you look at the US or largely Europe, office is a bad word.
Absolutely.
And, in India, we're seeing is, that we are going to be almost reaching the previous high of 2019. So, I mean, it's like phenomenal what the economy is doing and what this insourcing and global capability centers has been able to do, that the rest of the world is reeling under vacancy. And, we're going to see over the next 12, 18 months, a lot of the offices being handed over back to the banks in the US. And here in India, we're going to come to the previous peak high of 2019.
Oh, absolutely. Commercial real estate is a bad word in the US and could be the layman moment. I mean, not to scare, but that clearly is something which is an overhang on banks. But Deepan, is all this good news in the price? Look at that. Prestige Estate has risen 154% from year-ago levels. Brigade Enterprises has risen 92%, Macrotech 90%, Colte Patil 88%, all from exactly 1 year ago levels. Is it all captured, Deepan, or would you still buy real estate stocks?
Good morning, Lata, and thank you for having me on your show, and Happy New Year as well. Well, the real estate index, NSE, is up 80% last year. So one would have to say that part of the optimism has got priced in. And if you compare in terms of valuation, traditional valuation matrices like price to book, price to earnings ratio, then these are all at rich valuations. But the thing is that the real estate companies are keeping on adding land bank or joint development projects, and the prices are remaining firm. And most importantly, on the premium side, they're getting very good, I would say, profit margins over there. So while the momentum will continue, you cannot expect similar type of returns from real estate stocks in 2024. And some amount of, I would say, slowdown, or I would say mild cooling off of the kind of volumes which these companies have been selling, also one should consider, because the base effect also has moved up in the last year or so. So putting all of this together, I do feel that we may have a year in which real estate stocks more or less perform in line with the indices and not have the same kind of outperformance which we saw in 2023.
As we speak, Deepan, we are flashing the valuations. And as you point out, Godrej is at 5.2 times price to book. And even Prestige and DLF at over 4 times price to book. So are there any preferences for you here? Sobha is still 3.4.
Yeah, that's right. I think the way to approach real estate stock from an investor's perspective is to go for, it depends on your risk appetite, of course. And if you want to play it safe, then there's, of course, Godrej Properties and DLF. But our pick would be Sobha Developers from a valuation perspective, and some of the smaller new listings as well one could consider, because there's that valuation gap which they can cover. At the same time, I think the industry is doing so well, so a lot of the smaller developers also will benefit from an upswing in prices and increased demand as well. The likes of Macrotech or DLF, Oberoi Realty, I think they are quite well priced, if you ask me, at these levels. And you cannot expect a significant outperformance.
Okay. Anuj, what about price rise? Is it, I mean, you pointed out that I think it's about 5% last year. Is it likely to maintain reasonable? And is there a city-wise red flag or even a green flag? Some cities being more affordable than others or more lucrative than others for those who want to buy and sell?
So, I'm glad, Lata, with the rally, the way it is taking place, the developers have been pretty good. In the past sort of 3 or 4 cycles over the last 25 years, I haven't seen them being so disciplined. This time, whilst the sales have been very good, they've been very careful of not increasing the prices. They're wanting, sales momentum to continue to increase, cash to come in, their debt to come down. So clearly, I think that they will be very, very careful in not increasing the prices. My guess is that what they will pass on to the consumer will be whatever the cost of construction or the land cost increase is to the consumer. But they're not necessarily going to push for better margins. That's what my thought is. So my guess is that it'll pretty much remain sort of bound between 8 to 12% even in 2024.
Okay, that's good to hear. for the prospective buyers as well, and maybe not for those who want to cash out. Gulam, you know, your global Knight Frank report indicated that Indian HNIs are thronging to Dubai. Largest number of $10 million homes in Dubai this year bought by Indians. It's become a magnet for wealthy. Also because if you buy large properties, the chances of getting you know, a kind of a green card over there is becoming a possibility. Do you think that will take away the sheen from the premium market in India because of this alternative magnet, or does premium continue the brilliant run it has seen this year?
Well, I would want to say these two markets are mutually exclusive. You know, the people who are going abroad and buying have a different set of requirements and priorities. And the market that you're talking about, as far as Indian upper end and luxury, uber luxury market is concerned, the demand is more inward looking. The buyers who are buying it have the pent up demand was there for last so many years. After a long time, this segment is showing signs of improvement. The 23 was a great year for luxury housing. What you're talking about in Dubai, actually, in last year or year and a half, we are watching slight deceleration or reduction of volumes from Indians buying in Dubai, because a lot of those changes in taxation norms, etc., that our repatriation is becoming difficult. So I would want to believe that Indian markets will benefit from whatever is happening, and we would continue to see a bull run in the market here in India in the upper end of the market.
Okay, yeah, I mean, everywhere where, you know, it's Titan doing better than Tata Consumer. Wherever you see discretionaries and expensive ones, premiums are doing better than staples, and that's reflected here. Very quickly, Deepan, you know, stock market wealth creation normally reflects in greater demand for real estate. Not happening this time.
No, Lata, I would disagree. In my circle of investors and stockbrokers, many have moved into their new houses, especially. So there's clearly the wealth effect.
Moving into their own new house is a good sign. But, you know, rushing to become investors, that sign doesn't seem to be there. Is it? I mean, that's the sign of froth, I think, in previous terms, I was told.
No, there's a sea change in real estate industry in the last 5 to 10 years or so. And investing in flats or offices is no longer a fad. I think we are seeing great amount of financialization of savings. And investors prefer to buy real estate in investment trusts or real estate stocks rather than investing in actual real estate. So from that point of view, I think it's much better from the industry fundamentals.
Oh, that's good to hear. Thank you very much, Deepan. Out of time, but an interesting chat with you, Gulam and Anuj. Thank you very much indeed. I think that's a very important sign that the stock market froth, if any, is not becoming a real estate froth. That's positive for those of us who want to buy houses in 2024. Thank you very much for joining us on this special chat on Bazaar. Break. Chartbusters up next.
UltraTech Cement slumps in trade after the quarterly business update reflects lower than expected volume growth in the third quarter.